The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks. And I've got two more stocks for your aggressive growth radar screen. So let's get right to it. First one that I've got is DocuSign, and it's DOCU is the ticker. It's a Zacks rank number one. That means it's a strong buy. And it has the growth divergence that I love to see. That means a very strong growth style score and a weak value score. And that tells me right away I'm on the right track, because value investors and growth investors are inherently looking for different things. So real quick, let's just take a look at this. Earnings will be coming up in a week or two on the 7th of September. And we saw earnings back here. They beat, but boy, oh boy, straight on down here, 45-degree angle. Seems like it's enough. Let's go into why we like this name as a growth stock. Obviously, this is the thing where you sign your documents, you sign your PDFs, you sign your stuff digitally. They are definitely the leader in this space. It's transformed a number of industries. For just signing contracts where that's required. They've done a great job. The pandemic obviously really helped them. But if another pandemic should occur, this stock should continue to do well. Well, let's go ahead and look at the numbers anyway. So first thing we look at is, are they beating the estimate right here? And we see that from the surprise record. And we check that off as yes, they are beating the number, and solid beats over the last three quarters. Really like to see that. It's a 25% average. So we know that management can talk Wall Street to the right spot, guide them to the right spot, and then still beat from there. Now the Zacks rank, this is the thing about the Zacks rank. It's earnings estimates. Are they moving up? And we see 64 to 65 cents. Oh, that almost looks like a house. Maybe I'll fill it in and make it look like a real arrow, pretending as if I know what I'm doing here. Okay, there we go. Next quarter, sticking still at 57 cents. Full year, kind of done moving here at 51 cents, 251. And next year, really no movement. So we just got that penny, which is odd. But that tells us that a lot of stocks are seeing estimates move lower. When our stocks that are moving up, are having a strong Zacks rank, and there's only limited upside in the estimates, then we know that estimates might be coming down just broader scale. All right, so here we see our growth numbers, and the idea here is, it's a tech company still seeing decent growth. So 8% this year, 7% next year. This isn't the 50-60% growth, because we're looking at a very large base, 2.7 billion and almost 3 billion next year. Let's look at our valuation here. 19 times forward estimates. So when we think about that, we shift over and look at our growth. Our growth is a little bit better than average. We've been expecting, at least. Price to book is going to be high here at 13 times. This is an asset slim business. There's not a lot there. It's basically software. It's online software, that sort of thing. So, of course, there's going to be little behind it in terms of, it's not machinery doing these things. So price to sales 3.75. Would expect that number to be just a little bit higher. Here's the key: operating margins. We went from negative to positive here. We like to see that as sales grow and margins expand. Boy, that's going to do great things to earnings, and then they'll also be reflective in the multiple. So, our 19 times multiple, we think that one is probably a little light, for this type of stock. But it's really come in. The stock price has really come in. So let's take a look at why this has all happened. And we can see from the chart, here's your pandemic happening, and oh, this is catching on. This is great. This is unbelievable. This is changing our world. It's $300. And then we have that tech recession, basically, of 2022, where all those valuations really got ahead of themselves. And now we've just been hanging out here at about $50. So, is there a possibility that this moves higher? When we look at charts like this, or at least when I do, I try to look at that gap between the estimate lines. And this is the big number here. So we can see a real big move up. If this stock is earning $3 per share, could it, be in this range? And, Let's get back to 150 before we talk about getting to 275. Boy, that chart looks ugly. All right, well, at least with all my markings on it, it looked really really terrible. So that is DocuSign. It's a name to keep on your aggressive growth radar. So let's jump to our next one real quick here, if I can, and it is Sonos. Sonos is its name. SONO is the ticker. Zacks rank number one, strong buy with that A for growth and a D for value. Again, a good divergence. We don't see the earnings here on this for some reason. Okay, so they're back here, and it was a miss. And boy, that stock took a tumble, and tumbling again. Why are we looking at this one? Well, it's never too early to talk about the holiday season and how important it is for a retail name like this. So they make the audio video, all the speakers. Think of it this as those awesome speakers, subwoofers. Everyone these days has got the flat screen TV. To get the best out of your TV, you want really good sound, and the whole Sonos ecosystem speaker thing. It's a big thing. And I tell you what, I fought the trend for a number of years, and I've embraced the idea of sound bars and subwoofers and added speakers. It does make a difference when you're watching cartoons, or not. All right, so a miss, a huge beat, equally huge miss, and this is actually a gigantic beat when they're looking for 16. They're looking for a break even, and they get 16 cents. It's just you can't divide by zero. That makes the machine get all fuzzy. All right, so that's a so-so earnings history. So we beat and we miss. So here's your odd thing inside of the ghost inside the machine. 5 cents to negative 3 cents. That's actually going the wrong way. 89 from 98 to 89 cents, again going the wrong way. But the full year on the fiscal basis is looking up 92 to 96 cents, and next year looking down 108 from 106. It's interesting how you see these things inside of the estimates, and the Zacks rank will weight the annual numbers much more heavily than the quarterly numbers. So that's probably why we're seeing that sort of thing in there. So where's the growth, Brian, you big dummy? Losing 5% revenue contraction this year, but next year looking to get that same 5% back. So is it a wash? Is it whatever? What's going on? Well, let's look deeper into the actual thing. So it's a hardware name. So we're not going to see that big Microsoft 50 times multiple, only 14 times. That's pretty good. Book value, when you're talking about book value, value investors like anything under 3. They get ecstatic about anything under 1 because you're buying it for less than the value of all the assets on hand. So I like a low book value too. I don't want to say that that's the only thing I'm looking for, but it's in the mix. Price to sales. We want to see that number just over 1. We want the market to value their sales as being important. Margins, not great, not horrible either. I'd like to see them move a little bit higher. No real growth last quarter, but if we look at it on a sequential basis, things have turned around here, and maybe that's why the estimates moved up. So let's take a look at this. We have, after the pandemic, everyone's going to be making get their TV at home and get their sound system going, and then everyone's like, well, is it a one-trick pony, or are you just going to buy this thing and then forever never buy another one? That's a good question, and maybe that's part of the story there. But here we have a substantial. We see this miss right here, the big red arrow there, and then after that, boy, estimates really shoot straight up. So that is an indication that there's something else to this story, some other product in the mix maybe for Sonos. Obviously, when we're talking about it now here, as we're just about to enter September, we're only a few months away from the holiday selling season. This is going to be one of those things where if you didn't buy one of these before, this is probably going to be one of the pushes for this sort of thing. Speaker technology moves up, gets better very frequently. So we're looking for that as one of these holiday picks. That's one of your early holiday picks. So it's Sonos, SONO, and DocuSign. Well, that's it for this week. Be sure to join us next time when we look at 2 more stocks for your aggressive growth radar screen. And until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.